I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing green arrows around the world this morning as China hit its highest level since June 20th, and the Nikkei had a strong bounce back, while our futures are up about 6 to 7 handles. So does it look like we can officially say the bears have turned over the ball to the bulls?
Well, you could say that today's morning looks a little bit different than yesterday. So yesterday we came in and it looked like the Bears were marching down the field, getting ready to get into field goal range. And they might even said to the field goal unit, guys, you know what? Why don't you step off? We could go down the field and maybe get a few more first downs and a touchdown. Because if you read all the articles out there about Faber calling for a 1987 style correction, or S&P coming 1500, blah, 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 they got a little overly aggressive. But meanwhile, okay, we opened up, I think, down 6-7 handles yesterday. The lows of the day were put in the first 10 minutes, and we closed green back above 1684. So I would say the Bears have a 3rd and 27, which means they need a heck of a big play to get back in control.
Well, you mentioned that correction. There are lots of calls out there for a 10% correction, but we are seeing markets hold where they have to, essentially. So how much of a concern is that to you?
Well, reading the articles about all the doomsday guys or the fear mongers that we've been fighting for 2 years now, I'm not that concerned. You know what? If the market action tells us that we're going to correct, I'll be on board for it because we've come a long way. But if you look at the chart of the SPX, you will see that the channel is still intact. Okay? Remember we started here in November. This was your long-term trend line, and then you had your accelerated trend. This is an accelerated trend that a lot of active or intermediate guys follow that finally broke right here when we broke below the 50-day moving average. Everyone here said 10, 15, 20%. What happened? We hit the 100-day, regrouped, bounced off it, digested, broke the downtrend, and now here we are. So let's take a closer look to where we are. So here is this area. Yesterday we opened below recent support, right, below that 1684, and we regrouped real quickly. And now we're opening up right back into this range. So if you want to just compartmentalize it, all right, here's your upper end of the range, here's your middle end, and here's the bottom end. And if these bears are going to be growling and right, we're going to need to close below this area in order to even just get a move to the 50-day, which would still be healthy. But overall, we're still in this upper range. We still have a lot of nice individual stock movement, and the world markets are actually helping to promote the bullish case.
Yes. Well, we do have the retail sales report at 8:30 a.m. this morning, so we're going to be putting the spotlight on retail. But in one of the big headlines of the day, we just heard activist investor Bill Ackman is going to be stepping down from JCPenney's board. So do you expect there to be a lot of action in JCPenney today?
I expect there to be a lot of page views in JCPenney today. I don't know about the actual action because every media outlet across the world is talking about it. Meanwhile, I think it's just as noisy as the Dell private situation. But anyway, whenever you have a stock that's been so battered and so bruised and so shorted and a guy like him involved, maybe there's a play. Before, when I came in here, it was up 10 cents. So look at the chart here. This is what you could do with it. It's obviously been in a real, big downtrend, from here all the way to the lows. So there is a motion in here if you got caught in it and you're stuck in it. But if you're not and you're a trader and you want to approach it, with a plan, here it is. Here's your support to trade against, which is about 1252. If it were to get above 1370.14, maybe there's a trade there. I wouldn't say it could be it might, who knows? Maybe they get really squeezed and people get enthusiastic, but this is it. 1370 maybe to 1485, and then that would be resistance, and then this would be another wall of resistance. I'd be really surprised if that's the case, but if it does get over 14, my guys will take a look at it and perhaps we get a nice, cute cash flow tactical trade.
But so then it might be safe to say for you personally, you'd rather look at a stock like Nike, where we've talked about a nice pattern developing.
Yeah, I'd like to look at nice setups that trend, that use chart patterns and continue. And for investors, Nike's been something that if you've held it, you're pretty happy, right? If you've traded it, there's also been opportunities. And right now there is another opportunity here with Nike. You look at the chart, okay, it's been digesting. This was a really nice igniting bar that came right here above this downtrend. Since then, it's been consolidating for, what is it, 6-7 sessions. So, that's shown commitment to let the 8-day catch up. So now if Nike can get above, what is it, 66.85? There's the potential of another nice trade here, maybe up into the 70 area. Look at what happened with Under Armour. Under Armour, really nice consolidation, gap up, sideways. I'm going to give a shout out to my man Carter, who sits next to me. He's been all over this. Look at that trade. Anyway, there is a lot of opportunities in retail, but you have to be looking for the stronger patterns.
Well, let's talk one of my favorites. TJ Maxx picked up some buyers around the 52 level yesterday after a 4-day pullback. I like this one. Do you?
Well, you look very nice in TJ Maxx. So
I actually think this might be from TJ Maxx, so ringing endorsement.
Can we pan it up and down? No, kidding.
No.
Well, every stock is not just a momentum play. Some you could buy on the pullback. You can buy into the moving averages, and look at TJ Maxx. It just pulled back. So, you had a trade that broke out, and now we're back into the somewhat trend line. So if you want to buy a dip and you're not just a momentum guy, this 21-day moving average has been holding, for since June, so to speak. So anyway, with that said, it did go green yesterday. Maybe you picked it up then. If not, I still think this area is worth a tier 1. And then at some point, retail stays strong. It has a strong back to school season, and girls start looking like Brittany. All of a sudden, boom, you're at 2013 highs.
This guy. How about Walmart, which did pull off its highs recently, but it is trying to hang above the 50-day.
This one, I just think some of these mega caps, even like the banks, whatever, they've been a little bit out of play. It's been more, mid cap, Russell type stocks. So Walmart, it would be good for the indices if Walmart, gets back in vogue. And right now it is trying to close, hold the 50-day moving average. This was your last breakout right here after holding the 200-day. So it did find some support. I'm not in love with it. If you want it to be in some because you like Walmart, okay. But ultimately, this chart needs a little bit more time. If you recall, I don't know if you ever heard me say this, but this was my stock of the year last year. And look at it because of this pattern. Boom. Look at this decade-long, pattern of pain, and now it's been trending higher. At this particular point, it's not really so compelling, but it still looks good. It's still hovering above the 8-day moving average, still trending. I just don't really expect it to make, new historic highs anytime too soon.
Well, not only have I heard you say that, I've also heard Scott say that we look for stocks with relative strength, which is just what Nordstrom showed yesterday, and it registered 3.4% of gains. Will this one be on your radar today?
It could be on someone else's. It probably won't be on mine, but it did have a nice potent day. You look at the chart here, you look at the trend. This trend in Nordstrom has been very strong. Look at the size of this igniting bar yesterday, so that might have taken some people by surprise right here. It did reclaim some of the moving averages. I'd say let it hold half of this, let it hold above 60.29. Then at some point, it'll have some resistance right around here, but it's still trending. It's not sexy. But it's it's in the game. If you want some exposure to retail, this did hold the trend line and might just need a little bit more time to to form before making another move there.
What about Target? Wondering if it's not still in the game. It lost the support of its 50-day. It is still hanging above the 100-day.
It still looks good. Again, this kind of looks like Walmart, where it's not so compelling. It's not like an A-list type of setup. It's not like on your list. It would be a B or B minus list, which is over here. With that said, I'm trying to be funny, but that one really wasn't that funny. But here you have the this little downtrend or apex here. So it really, in order for traders to get excited about it, it's going to have to trade above 72. If you did buy it versus here, here's your new point of reference down at 70.32.
All right. Well, coming up, we're going to go in the trenches with high beta tech. But first, this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, where we've seen some continued strength. Take Apple, for instance, showing relative strength yesterday. We do have a date for the new iPhone, September 10th, and now reports this morning that we may have a thinner iPad this year. So finally getting those concrete product announcements that we wanted. May not be an iWatch, but it's something, right?
Oh, you beat me to that punch. Well, a nice refresh is good. Some innovation would also be helpful. You know, this stock has rocked a lot of investors out there, investors that don't follow technicals, but I understand because it has been Apple. You look at the chart here, you look way back when, what was it, last September, right around this time? That's when it peaked. That's when it broke the 21-day, the 50-day, when it broke its trend line. And it's been a big ride to the downside with some trades along the way. But anyway, here's your little bottom formation, that's been kind of forming, your double bottom. And really recently, this is what got me somewhat excited about it, is that finally you had a gap up after earnings, held for 3 days, and then gave you a nice move above this trend line. So that's when, it was on my A+ list. Gave you a nice move. I think I sold some into that. And then on this pullback yesterday, you never know when they're going to come out with one of their invitations, or so to speak. So I got back involved. Strong day yesterday. I think that it can take out this 471.89, maybe today, maybe the day after. But ultimately, this gap, in my opinion, gets filled up to 490. I like to see Apple back in the game. It definitely makes my day go a little bit easier.
Well, what list is Netflix on of yours? Because the stock did break out yesterday, and it looks like that could be a day one.
Yes, day one is right. I like day ones. I actually, unfortunately, missed this one yesterday. Sperling was on top of it, and this went from the B list to probably the A- list, which is pretty good. And if you look at Netflix right now, it's had a really nice move starting from this last gap up in the start of 2013, and then it's just been trending. Yesterday, it tried to clear this minor consolidation. Remember this day when Barron's came out with a negative article? I think that, that the new Citron, all they do is talk negatively, it feels like, about things. But anyway, with that said, it's tight again. It got above yesterday's high of 253.71, closed pretty strong. It's probably opening up a little bit today. If you could hold the up open, your next real point of reference is here, up at 270. But ultimately, giving traders some action on very 5 and 15-minute charts. And if you've been just sitting in it and holding it, you're also probably doing better than those trading it.
Yeah, and LinkedIn's giving traders something to do too. We keep talking about how it's not only holding above its earnings gap, but continuing higher above it.
Yes, it is. And same thing, different time frames, you have to look for different tactics. As a macro investor, you'll love cup and handle patterns because they are very reliable. They show you where they can go. You look here at LinkedIn, talked about this macro pattern till I was blue in the face way back here. Here's your cup, here's your handle. Brittany's very familiar with this because she handles pots and pans and does a lot of cooking, right? We talked about this the other day, the cup and handle. But I'm just saying, technicians, we come up with patterns that look like things because, we're not that smart. But anyway, with that said, you go above this 122, bing, bang, boom, there you go. And if you're wanting to just trade the cash flow of it, here's your gap up, went sideways, continued, and looks like it's in play. Rewarding those on all time frames as long as you're not looking at it at a valuation metrics, because if you are there, you're probably saying it's overvalued and not worth your time.
I think a lot of viewers out there are saying, speak for yourself, Redler. they're smart out there. How about Amazon? Looks like the pattern's getting pretty tight there.
It is, and this one has been like dribbling down since earnings. The earnings came out, they were somewhat softer. Everyone thought it was over. They squeezed everybody, and since then it's been just grinding lower. You look at the chart here of Amazon, and you'll see, it's not the end of the world. It did break below this little spot right here. So technically it hasn't been in play with the market, but look at the size of the move that it had since the last time we really spoke about it, around 285. So with that said, if it were to clear 301-ish on some volume with some strength, it goes from my C+ list. That's where Amazon is right now, my C+ list, to my B+ list. Closes above then maybe it gets back in vogue. You do have a long channel here. If you look at the size of this channel, it definitely could have driven you to drink even if it was a Monday, from the size of this with the back and forth before going. So why not, give it some space, give it some time, considering you look at the monthly chart of Amazon and it's been a huge winner.
And lastly, Google. Looks like it's running out of steam a little bit, but what are the levels you're watching?
Again, some of these capital-intensive stocks that don't have a catalyst right now, they just like kind of wander around, so you have to just leave them alone. And if you look at Google, it's really been pretty lethargic. it is forming somewhat of a pennant up here after a really nice move since November, even for this year. Remember when it broke above this descending channel right here? That was a nice entry, and that gave it some power to reach its peak before, this little flag to the downside. But anyway, I'd watch it right here. If it starts acting better and maybe come the fall, and for this, to be honest, this is like on the C- list right now. And if it were to break below this 881, chances are I could see 861. But overall, maybe it needs time. If it starts getting back above 895, maybe it'll go from the C list to the B list. But really, it's going to have to start getting above 910 in order to get some momentum back in this thing and some play.
Okay, time to do some quick hits here. Let's talk Tesla, which did fill its earnings gap to the downside yesterday, but it closed well off its low. So will you be watching this one for a trade today?
Yeah, this one, it held the 8-day. You didn't really know what was going to happen. You had Barron saying it could be a third of the price. You had someone, Lazard, I think, downgrading it. So you had the earnings gap, and it filled. So what does that mean? It means that some of the momentum was taken out of the stock. That means the speed might slow down a bit, so you have to just switch some gears. You look at the stock, though, it did hold the 8-day, okay, which it held during the last part of this move. I thought maybe, over time, maybe we get the 21-day like we got here and here. But as of right now, it held the 8-day. It's opening up a little bit, filling this gap now. So I just think at this point, it probably might just need some time. You could draw this nice big channel here, let it consolidate. Elon Musk came out with another huge innovative technology yesterday. This guy is unbelievable. But anyway, as far as the stock, I think it's, the high is 150.50. It could fill the gap, which gets filled up to, 153. And I just don't overtrade this now. I would say if you're in it long and you've been in long it since before last quarter, stay with it. Okay, if you're trading it shorter term, look at this mess in here. These are all 5 and 15-minute charts. Break it down to 5 and 15-minute charts for cash flow and let it reconsolidate.
And Zillow has been on fire, running from 58 to 97 in just a month. Doesn't necessarily mean that traders have missed the boat, right?
A little bit. I missed this boat. This boat sailed away, and Red Dog was like, oh, where'd that thing go? You look at it here, and I don't even know how this happened. I haven't looked at it once. So, how come someone didn't bring this to my attention? Always give, never get back. Anyway, this was the last time it went above 79, and it's still consolidating, looks good. Above the 8-day, a little extended, so kind of hard to enter here, but overall acts very healthy and a very strong trend.
And 3D Systems looking good. Do you think we'll see it make some new 2013 highs?
You know what? I do. And you look at this chart, first of all, the 3D technologies sector has been unbelievable for guys who got, who learned how to deal with it. You have X1, you have SSYS. I have to say that, come back to me with the camera as I'm speaking, please. I have to say Steve LeVay and Mike Lee are all over this group, and they're in the momentum room. So if you want to trade momentum and you want to get to know these stocks, that is a great room for you to go in because they love to trade these. And I visit them every now and then when there's a good pattern. So first thing first, look at SSYS after earnings. Look at this powerful move. Another historic high in a group that is rewarding investors and traders who learn how to approach it. Very nice move. Triple D, which didn't have as good earnings because of a lot of acquisitions, is starting to act better again, starting to move. Look at this upper level here. So Triple D since May has now been in a very high level consolidation. Yesterday I bought some, after getting a little, messed around in here, but nice potent move right towards the highs. If it could trade above yesterday's high of 50, the historic high is 51.45, and I do think that it will get over that. It's just a matter of when, and I'm going to try and stay with it.
All right, and we've continued to talk a lot about VMware, which has been continuing to act well. How much room to the upside do you think it still has?
There's still a big gap in front. We talk about this type of strategy, the gap up, digestion, consolidation. Everyone's probably sick of me talking about it, but deal with it if you're watching. Can make you money if you learn how to handle it. You look at the chart here of VMW, you'll see big gap up, digestion sideways, continuation. Here you go again. So above, 86.30. Look at the gap you have in front that can get filled all the way up to 96. That's 10 more points if the bulls want to try and reclaim a big portion of it. You go overall, look at the macro chart, it's been repairing. This used to be a high flyer back in the day, but you have a nice big gap up. You have a big buyback, and I still think there's room to stay with it.
And Yahoo on Friday, Scott tweeted about a different kind of setup in Yahoo. How is that trade playing out?
Well, I just said, there's not always a momentum trade there. I said, if you want to buy Yahoo, there's a base to buy it against. And then yesterday, Mark was talking about it on the VTF, and look what happened with Yahoo. Okay, this stock became one of my favorites, you know, and I had to listen to the 2013 plan because of this channel here. Since then, it's gone really well, holding, you know, the 21-day, the majority of the time, holding trend. And then, you know, yesterday or last week, I'm like, you know what? You know, this was the earnings move. It looked really good until the news that, you know, they took one of the big holders out. I'm not going to get into that. But anyway, yesterday I woke up. You have a gap in front, you know, above yesterday's high of 28.37. It could get filled. I think if you bought it in the last day or two, maybe trim and trail some if you have a short-term time horizon, or stick around. Maybe it makes 2013 highs in the fall.
And Mosaic looks like it's basing in front of the bearish gap from July 30th. Do you think it looks like it'll try to fill this gap?
I think a portion. You know, I've been trading pot and Mosaic here and there, and you know, we had a nice 3-day move, part of my 3-4-day technique. With that said, you look at the chart here. I think a lot of the bad news is priced into it, and with the world markets recovering, I guess, you know, man's got to eat, and you know, so maybe they need some fertilizer. With that said, above 42.80, you have a lot of room here. I also think POT, which also looks very similar. If you weren't caught in the mess in the downdraft, you could get a trade if it starts trading into this gap. And when it does go into gaps, it moves pretty fast. So if you're a trader that could take on some risk, that could be a good spot, especially, again, if you haven't been caught in this mess. And look at the mess in pot. Woo! So we'll see what happens here. I think it's something tactical.
All right, so how will you be approaching the start of the trading session today?
I just keep making moves. I think yesterday came in net short because things didn't look as good, and then in the morning covered some shorts, got long a few extra things. Today I come in pretty net long, probably sell into some strength, see how we handle that into the range, see if other stocks pop up. And I think the real way to go is doing a little bit less, just looking for the A setups. Watch things that go, like I said, from the C to the B list or the B to the A list. And if they are at a key spot, then maybe try and put it on, make some money, and I would say more love them and leave them during the summer. You know, it's not cold outside. Anyway, with that said, just be on the move and have your glass half full. There's still a lot of action out there. Don't believe everything you read. You know, trust the technicals, trust the charts, and trust your ability.
And have a great Tuesday. Happy trading.